Hello, everyone. Welcome to the Connecticut Green Bank's fall quarterly webinar. My name is Rudy Stirk, Associate Director of Marketing. And on behalf of all of us at the Green Bank, I want to thank you for taking the time today to join us to hear some of our program updates. There's a lot happening at the Green Bank, and it's a very exciting time for us. And we're glad you could all join us today to hear a little bit about some of those updates. So we're going to go through a couple of different things today. We are recording today's webinar, so for anyone you want to share it with after the fact, we will be sending out a link to everyone who registered so they can get that recording. And we're going to walk through some updates on our Energy Storage Solutions program, an update on our Smarty loan program. Then I'll turn it over to Mackie Dykes, who will talk about our building solutions with some new updates for CPACE. We will then turn to David Beach, and he will talk a little bit about our investment solutions, particularly our Green Liberty Notes, which we currently have an offering open. And then we'll have some closing thoughts and go to a Q&A session. So if you have questions as we go through, please put them in the box, and we'll do our best to get to them at the end. If we don't answer them all, we'll do our best to follow up after the fact. So without any further ado, I'm going to turn things over now to Green Bank President and CEO, Brian Garcia.
All right, thank you, Rudy. Thank you for that opening welcome. Just want to say good afternoon and good morning to all of you. We've got a wide variety of audience members from across the country today, so welcome. What I thought I'd do is, given the audience, is just do a real quick update on the Connecticut Green Bank. And how the Green Bank movement is progressing to Green Bank 2.0, really exciting with respect to the Inflation Reduction Act and the Greenhouse Gas Reduction Fund specifically, then turn it over to the team to work through our programs. But the Connecticut Green Bank, we were actually formed as a piece of legislation, Public Act 1180, that passed on a bipartisan basis, actually a pretty nearly unanimous bipartisan basis in July of 2011. We were section 99 of that 135 section bill. We are a quasi-public organization, which essentially means that we use private sector disciplines to achieve public sector goals. So we really get to take the best of each sector. From the public sector side, we're very focused on social and environmental impact, and from the private sector side, we get to operate at the speed of business. Quasi-publics are also, in our case, an intermediary in the market, and that's to say that Connecticut has really ambitious public policies. We've got a 45% reduction of 2001 level GHG emissions by 2030, a 40% renewable portfolio standard by 2030, an 80% weatherization target by 2030, as well as 100% zero emission school buses, specifically in environmental justice communities by 2030. I could go on and on. Connecticut has great policies to encourage clean energy and address climate change. And our role is to really translate that policy into opportunities in the private markets, because we want to see private investment coming into Connecticut to help us achieve those public policy objectives. So we play that intermediary role between public policy and markets. We provide families and businesses with the capital that they need to finance clean energy. You're going to hear about some of those programs here in a second. And in July of last year, through another bipartisan passage of a law led by Governor Lamont, our scope was expanded beyond clean energy to also include environmental infrastructure. So stay tuned for that. Probably end of 2023, 2024, we could now apply the Green Bank model to water, waste and recycling, land conservation, parks and recreation, agriculture. If it involves the green economy, we can enable more private investment in it. So stay tuned for that. Over the last decade or so, we have invested about $320 million of public funds to mobilize $1.9 billion of private. And that public funding has gone out as loans, not grants. So we've actually built a strong balance sheet as an organization that allows us to partner with financial institutions to enable their capital to flow into Connecticut. That investment has led to over 500 megawatts of renewable energy deployment, 65 million MMBTUs of energy efficiency savings from all the projects over their useful life, has helped 65,000 families and businesses reduce the burden of energy costs. Obviously, with that investment, we get job creation in our community, so over 25,000 jobs. That deployment and investment also leads to tax revenue generation for the state. So we've helped generate over $110 million in sales tax, individual tax, corporate tax, and stay tuned, we're going to be looking at property tax revenues as well. And all of that clean energy deployment has helped the state lead to a reduction or avoidance of over 10 million metric tons of CO2 emissions. So we've been at this for a decade. We're now really excited to be moving towards a Green Bank 2.0, and I wanted to give a little bit of history as to how we got started. Let's go to the next slide, Rudy. So it was really back in 2009 in the federal government when Congressman Ed Markey introduced with Waxman of Massachusetts, or excuse me, the American Clean Energy and Securities Act of 2009. Within that bill, also known as the Markey-Waxman bill, the Cap and Trade bill, Congressman Chris Van Hollen in committee had introduced the Clean Energy Deployment Administration, which would have effectively been a national climate bank underneath ACES. That bill narrowly passed the House. It did not pass the Senate. So the proponent of the bill, who you actually see there on the right-hand side, just above Governor Malloy on the left there, is Reed Hunt, the executive director of the Coalition for Green Capital. He effectively said that if the federal government wasn't ready at the time, then why don't we take this to the states? And he came to Connecticut, partnered with the governor and incoming commissioner of the Department of Energy and Environmental Protection, Dan Estey, and effectively in that public act that I noted, created the nation's first state level green bank. Let's go to the next slide. But of course, that journey involves a lot of us across the country. There are local green banks. We've got the Climate Access Fund, NYSEG out of New York, the Montgomery County Green Bank, all at the local level, and we're seeing more interest from cities and counties in terms of wanting to create their own green banks to support their ambitious clean energy, climate, and economic development policies. And of course, we've got states across the country with their green banks, New York, the New York Green Bank, the Rhode Island Infrastructure Bank, California, Hawaii, Illinois, Michigan, Maine, Puerto Rico. I'll be down in Puerto Rico next week to support their efforts on the green bank. So on and on, lots of activity across the country at the state and local level. But we've also got community development financial institutions right there side by side with us, credit unions, community banks. Inclusive is an association of credit unions. They've got a number of their credit unions out there. We've partnered with a few of them here in Connecticut. The Opportunities Finance Network, an association of community development financial institutions, is out there. And then, of course, our partner, Inclusive Prosperity Capital. They are out and about advancing the green bank model across the country. So we're excited to see all this development across the country. And let's go ahead and go to the next slide, Rudy, which ultimately led to, within the Inflation Reduction Act, a couple of things happening. I think we're all excited by the rebates and credits that are within the Inflation Reduction Act. That will unlock a lot of investment in clean energy across the country. But there's also a 4-page provision in there called the Greenhouse Gas Reduction Fund. And I want to call out a few people. Let me start off with Senator Sanders, who led the effort on the $7 billion zero emission technologies portion of the Greenhouse Gas Reduction Fund. This is specifically targeted at low income and disadvantaged communities. So if you are a state, a municipal, tribal government, or other eligible entities like a 501c3, be ready for this RFP to come out from the EPA at some point. So thank you to Senator Sanders for moving that within the Greenhouse Gas Reduction Fund. And then you've got the National Climate Bank proponents. So we've got the Congresswoman Dingell, who has, over the last several years, just been an inspiration leading the Clean Energy and Sustainability Accelerator, which is also known as the National Climate Bank, but also known as that $20 billion within the Greenhouse Gas Reduction Fund, working with again, they're coming back from 2009 from being congressmen to now senators. So Senator Van Hollen and Senator Markey coming back to introduce that $20 billion National Climate Bank within the Inflation Reduction Act Greenhouse Gas Reduction Fund. So in total, there's 15 billion of the 27 billion. Over 55% of the funding will go to low-income disadvantaged communities. So that's great. One of the things we've all learned across the country is that green banks and our community development financial institution partners are enabling more investment to flow to those who need it the most. So that is definitely our focus. And of course, we've got the President Biden and his administrator. For all of you nutmeggers on the call here, we're all big fans of Gina McCarthy, who was our former commissioner here in Connecticut, a big hero. And Administrator Regan now of the EPA is going to be overseeing the administration of the Greenhouse Gas Reduction Fund. So get ready for Green Bank 2.0 as we look towards that 7 billion and 20 billion to enable more multiples of private investment, just like I introduced to you with respect to the Connecticut Green Bank. Let's go to the next slide. Just real quickly, this is just a picture of the celebration at the White House with the passage of the Inflation Reduction Act. You know, there are many of us out there on this webinar, out there, out and about in our communities, putting out the fight for climate. It was great to be there with our partners. That's Bert Hunter there in the middle, Jeff Shub and Alex Craigie, who have been working on this for more than a decade. And it's just great to see the Greenhouse Gas Reduction Fund now an integral part of the Inflation Reduction Act. So just wanted to give some of that background context to our new listeners here today. And let me turn it back to you, Rudy.
Thank you, Brian. We will go back to Brian at the end for some closing thoughts, but right now I'm going to turn the mic over to Ed Kranich, who's the manager of incentive programs, who's leading on the Energy Storage Solutions program, and he's going to give us a little bit of an update right now.
All right, thanks, Rudy. Next slide, please. So just for an update on ESS, so I'll start with just kind of a quick high-level overview. I think we've gone through this in a past version of this this update. But so for those who don't know, ESS was created to give customers added resilience as we face larger and more frequent storm events as a result of climate change. Customers can install a battery for their home or business paired with solar panels or standalone. And this provides an individual benefit to the customer by providing peace of mind that they can keep the lights on or continue their business operations in the event of an outage. ESS provides an additional benefit to all ratepayers by using the energy in those batteries to smooth out the peaks in power consumption on the grid during high demand times, such as very hot summer days or very cold winter days. The program pays those battery operators incentives for using that battery power unless there's a major storm event in sight, in which case they would cancel any events known for that day, just to make sure that customers can have resilience in the event of an outage. So since those peaking power plants that we're trying to avoid are often the most polluting and the most expensive, benefits of the ESS dispatches serve all ratepayers in the form of a cleaner and more reliable grid. Next slide, please. So for residential and commercial customers interested in participating, we encourage you to visit energystoragect.com for more information. There you can learn about incentives and find a contractor. If you're already a solar customer or you've been working with a contractor in other ways and you're happy with that experience, try reaching out to that contractor first to see if they'll retrofit a battery to your PV system or if it's a service that they already offer. If you're new to this and you need to find a contractor, you can certainly find one on energystoragect.com, depending on if it's residential or commercial. We have the list split out. So your contractor will walk you through the process, including mapping out what devices in your home or operations of your business are the most critical to you. So the size of your battery, corresponding costs and incentives will all depend on your needs. Next slide, please. And finally, for contractors in attendance today, consider joining ESS. So first, we encourage contractors to check the eligible equipment list before getting started in the process. We also have a program manual posted in the link on the bottom of the screen here, so you can find information about how the program works and kind of how to speak to it to customers. So after checking the eligible equipment list, if there's a product that you offer on the list, that's great. If not, you can get in touch with the Green Bank and we'll reach out to that manufacturer to help them get ready to join ESS. There's a little bit of a process involved to get equipment to be compatible with the way our program works. So we work with vendors to make sure that that's done expeditiously. So next, you should get certified in a product if you're not already. So there's a couple manufacturers on the list here. There are more. Again, if you go to energystorageCT.com, you can find the ESS eligible equipment list on that site. So once you're certified in a product, you can apply to become an eligible contractor. So again, visit the website or reach out to anyone at the, or reach out to me or Emma Savidra at the Connecticut Green Bank, and we can help you get started on that process. So now I will turn it back over to Rudy for the Smart loan.
Thank you, Ed. That was excellent. So just a quick update on Smart loan. I know we've talked about Smart loan many times on these update webinars. Just a reminder that it is out there and it is available for folks. You know, it does finance a lot of energy efficiency and renewable measures. There's 40 different home improvements on the list, and loan amounts up to $40,000, and a vast contractor and lender network to help make those projects a reality, to help homeowners save energy costs and make their homes more comfortable. One thing to note, I know last time we mentioned a special rate offer. That special rate is coming to an end at the end of this month on October 31st. So if you're listening and you're a Smarty contractor, get those applications in. If you're a homeowner, there's still a little bit of a window of time to hit that special rate, which is 2.99%, or for homeowners that are at or below 100% of state median income, it can be 1.99%. So those special rates are on heat pumps, including air source, ductless, ground source heat pumps, and geothermal, as well as battery storage, which I just talked about, and EV charging equipment. So again, that rate is ending on October 31st. So get those applications in. So with that said, we're now going to shift to the building solutions side of our organization. And I'm going to ask Mackie Dykes, the Vice President of Financing Programs, to walk us through some updates to CPACE.
Great, thank you, Rudy. Next slide, please. So I'm going to talk about two CPACE opportunities, but before I do that, I'll remind everyone just what CPACE is. So Commercial Property Assessed Clean Energy, CPACE, is our primary financing mechanism for clean energy improvements in commercial, which really any non-residential is probably the right word. So any commercial, nonprofit, multifamily property that wants to access clean energy, this is the Green Bank offering for that. Through CPACE, we can finance 100% of the cost of a clean energy improvement. This is secured through a tax assessment on the property. So that unlocks very attractive financing, low cost, fixed rate, long-term funding for up to 25 years. So when you look at the terms like that, what the sort of the value proposition you can present to a property owner is that the repayments on that financing will be less than the savings on their energy bill. So they're able to be cash flow positive from day one, no money required out of pocket. And you're able to, improve your property, bring all the sort of non-cash benefits to your tenants, such as a more comfortable and healthier environment. Next slide. So CPACE is, as I mentioned earlier, traditionally been available for clean energy improvements that reduce the energy consumption of your property or produce clean energy. In the most recent legislative session, EV chargers were added as an eligible measure for CPACE. They hadn't been eligible on their own before because it is an argument clean energy improvement since you're powering electric vehicles, but they actually increase the electric consumption of a property. So they were not eligible before as a standalone measure because they didn't meet the requirement that the energy savings of the project exceed the cost of the financing. That sort of cash flow positive attribute I mentioned earlier. So EV chargers were added as an eligible measure for standalone, and most importantly, they were exempted from that requirement that the energy savings exceed the cost. So, now that the state has last year started an incentive program for EV chargers, we now have this great financing tool to offer alongside that. We're starting to see a lot of initial interest in this, especially in commercial properties that are looking to install multiple charging stations or level 2 or level 3 chargers. CPACE is a great tool to make up the rest of the cost that's left after those rebates from the utilities. Next slide. And one other CPACE opportunity to touch on, this will be the first of, I hope, many opportunities that the Inflation Reduction Act has opened up that we'll be able to touch on in these and other Green Bank webinars. But just one we wanted to highlight today. The Inflation Reduction Act allowed nonprofits to access the benefits of the investment tax credit. So, in the past, it's a tax credit, so in order to monetize it, to take advantage of it, you had to pay federal taxes. So nonprofits, municipalities, other non-tax-paying entities, most of the time it didn't make sense for them to own solar because this ITC was essentially left on the table. But thanks to the Inflation Reduction Act, the full value of the credit is now available as a grant from the IRS. So now a nonprofit can install solar and, in a process soon to be determined by the IRS at some point, receive that payment for the value. So CPACE can now be used to finance the full cost of the project installation. So this adds another option to, as nonprofits are thinking about going solar. This is another way they can do it alongside the Green Bank Power Purchase Agreement still remains an option if you want to have the Green Bank and our partners monetize that tax credit and pass on the benefit through cheaper electricity. And then our roof lease also still an option where we just rent your roof to install solar. But a lot of entities like the economics can be better if you own the project yourself, but then there's just the enjoyment of really feeling like you're going green and getting clean electricity. So it's great to see the IRA opening up this opportunity. And again, we hope to be coming back to you in the future with more and more opportunities that are unlocked by the massive investments we're seeing in the IRA. Next slide. And then finally, I know we talked about this in the last webinar, but CPACE is also available for new construction projects. It can be used to reduce the cost of capital for a project or increase the total capital to hope to add in more clean energy benefits to your project. Next slide. And we are holding a webinar on December 7th to delve more into the details of how to integrate new CPACE into your new construction project. You see the registration here. So if you're interested, please please register or reach out so we can get you details. Next slide. I think that's it. Yes. So I'll hand it back to Rudy. Thank you.
Great, thank you, Mackie. Now we're going to shift gears to our investment solutions, specifically our Green Liberty Notes. And I'm going to hand the microphone over to David Beach, who is our manager of clean energy finance. He's leading the way on these notes. I believe he's with us now, having just done another webinar about notes presentation on notes with our colleagues at Raise Green. So David, if you can hear me and you're ready to go, I'll turn it over to you.
Hey, I'm ready to go. Thanks, Rudy. All right, so I'm really excited to talk about our now fourth round of Green Liberty Notes. So in the first three rounds, we've raised more than $560,000. And these are our sort of successor to our Green Liberty bonds. We've wanted to find something at the Green Bank here to make investing in the great work that we do in Connecticut's green economy even more accessible to everyday Americans and specifically Connecticut residents. And so that's why we created these Green Liberty Notes. They are 1 year fixed interest. They kind of function like a CD, right? You put your money in, a year later, you're gonna get your money back with interest. Super easy to do, only costs $100, which is about the lowest you can get one of these investments for on the market. So we're really proud of that. We're also proud to say that these are green bond certified. We brought in cash flow verifiers to provide a second party opinion and designate our Green Liberty Notes as Green Liberty bonds. So in addition to having confidence that you're going to get paid back, you can also have confidence that these are supporting green investments here in Connecticut. You know, you can save money on car insurance in 15 minutes, but you can invest in Connecticut's green economy in about 10. So if you just go to greenlibertynotes.com, you can learn even more. But I'll tell you a few more items that are worth noting. These notes are supported by the Small Business Energy Advantage program here in Connecticut. The Small Business Energy Advantage program offers interest-free loans to small businesses in towns who want to do energy efficiency. They also come with upfront incentives to help lower the cost of an energy efficiency project. And it's really nice because they can be paid back on a customer's utility bills. So all of these things dramatically lower the barrier of entry to businesses in towns who want to improve their energy efficiency, save costs, and also protect the environment by using less fossil fuels to generate electricity. We have a great example of the impact of an SBA loan here. One of these loans saved a family farm $85,000 a year in utility bills, reduced their lifetime carbon emissions by 237 tons, which is equivalent to removing 33 cars from the road. So when you're investing in a Green Liberty Note, this is what you're investing in. In addition, you're earning a great rate of return, 3.5% interest. That's very comparable with the best, 1-year CDs you can find out there on the market. And we're really proud of that. And we've also taken many steps to make sure you can have confidence that you're going to get your money back within interest rate. I can't go into all the specific terms for some regulatory reasons, but you're welcome to read all about the particularities of the investment at greenlibertynotes.com. But again, we were really excited about this. We got these green bond designated. You can have confidence in that as well. And otherwise, please just go to greenlibertynotes.com. The one other thing I have to mention is if you see the investment filling up, that's because it is. Our last one was completely sold out. But don't fret if you see it getting up there to $250,000. What we do with these Green Liberty Notes is we protect investors who invest at those lower amounts. So if we get our investments filled up by high dollar amounts, we're first and foremost going to protect the investors who invested $1,000 or less, because that's really what these are for, to be there for investors who aren't able to get in on the ground floor of green bonds that are $1,000, $10,000. That's why we created these. So again, please go to greenlibertynotes.com, fight inflation. I know everyone's hurting with that. You can have confidence you're gonna get paid back and earn a great return. So please go to greenlibertynotes.com. You only have about a week left until this issuance ends. So get them while they're hot.
Thank you, David. That's a great overview. as David said, go check out all the details at greenlibertynotes.com. There's a lot of things that we can't really say, legally due to securities laws and things like that. But the point about it's really quick and easy to do it. It's secure. You can put anything from $100 to $10,000 in and earn a great return on that, and know that you're supporting local Connecticut businesses. It's a great thing. So thank you. Thanks, David. So we're going to go on to some closing thoughts now. I'm going to turn the mic back over to Brian Garcia.
All right. So thank you, everyone, for all those updates. Very cool stuff. For those of you who are out in the audience, feel free to chat through. Forgive me for that sun in the background there. Feel free to chat through any questions that you might have. So we're just kind of wrapping it up here. Obviously, with the signage of the Inflation Reduction Act, I think that has all of us across the country trying to resolve in our minds how our local and state policy environments in connection with the tax credits, rebates, greenhouse gas reduction fund underneath the Inflation Reduction Act can help us all navigate ourselves through the incentive maze. This is a term coined by our very own Bert Hunter. If we can figure out in our respective states and localities how to pull all those things together and make it easy to the customer, then we will be able to get to those ambitious public policies that we're after. So just inviting everyone who's out there to really think through that, share as much information as you can in terms of what you're learning, and let's find ways of mobilizing more investment in families and businesses through clean energy deployment. Let's go to the next slide. Some of you know that per Special Act 22-8, an act concerning the Hydrogen Study Task Force, that the Green Bank is chairing a group of stakeholders that will be issuing findings and recommendations to the Energy and Technology Committee regarding hydrogen in the state of Connecticut. We've got a number of areas that we're digging into, from sources and uses to funding and other sorts of incentives to encourage this in Connecticut, as well as thinking about and working with our partners here in the Northeast on the Northeast Clean Hydrogen Hub. But I would invite folks, if you're interested, to join us at our next task force meeting, which will be on November 8th at Dominion down in New London, Connecticut. So feel free to join us down there, in Waterford, Connecticut in a few weeks. Let's go to the next slide. Just kind of wrapping it up here. Just want to come back to our vision statement of a planet protected by the love of humanity. As environmentalists, we are all, or many of us, are focused on confronting the climate crisis. But if we can't have environmentalism without humanitarianism, we can't solve the issues of climate if we aren't helping each other and specifically lifting each other up. So I just wanted to wrap up my remarks today with recognition of Mother Jennifer from the Daughters of Mary of the Immaculate Conception, who we lost in a fight to cancer last year. That's her in the right-hand picture there. In 2018, we had a ribbon cutting ceremony for a 1.2 megawatt ground-mounted solar PV system at the Daughters of Mary, and I was out there talking about all our impact metrics. I gave you all some of those today. We had enabled $2.8 million of public and private investment in the project. The project created jobs, it reduced greenhouse gas emissions. So all those things that us government types always get out there and talk about. She got up behind me and said, yeah, Brian, but as a result of this project, you all do so much more. With the savings from the project, I'm able to increase my summer programs for the young and the elderly, and I'm able to increase my housing programs for the poor and the battered. So that is love. When we think about what we're all after in terms of confronting climate and enabling more investment in our clean energy economy, we really need to lift each other up, just as Mother Jennifer has. And we celebrated this project recently with a microgrid. So our partners at the Department of Energy and Environmental Protection, through their microgrid grants program, helped support the build out of that project to now deliver high reliable power to the campus. And there you see next to us the mayor of New Britain, Aaron Stewart, and the former Congressman Joe Kennedy III who was there from Citizens Energy celebrating the project. So a planet protected by the love of humanity. We have to all really dig deep and think about what we're doing. If we aren't helping each other first, Justice 40, just transition, we're not going to get to solve those climate problems that we're after. So put those as a priority. And I'll leave it there, and we're happy to take questions.
Thanks, Brian. So we had a couple questions that came in specific to Smarty that I'm going to follow up directly with the contractors who've asked, because I want to make sure I get you the exact correct information before we put wrong information out into the world. So we will follow up on that. We had a question come in about, well, it's not directly related to the Green Bank, Brian. Maybe you have some information on this. I don't know. I'm going to put it out there. Any information on how the administration of the homes and HERA, HEEHRA rebate programs might work in Connecticut?
Great question. So just for the audience, this was one of those rebate programs through the, or several of them through the Inflation Reduction Act that are also a component of it, alongside the credits and the Greenhouse Gas Reduction Fund. I think that's a to be determined question. Those are formula grants, I believe, that will direct those federal funds to the state. So those resources would come into, I would imagine, our energy office, which in this case would be DEEP. I would imagine that DEEP working with the, given the nature of the homes rebate, that they would be working closely with the electric distribution companies as the administrators of the Conservation and Load Management Fund. So I think it's safe to say money coming in, priority will be vulnerable communities, low income, disadvantaged communities, to make sure that we're enabling investment to happen there. But to be determined in terms of the process, DEEP and the EDCs will be using to distribute those resources. Stay tuned.
Thanks, Brian. So we had a question regarding the ITC and nonprofits. So do we think with the changes that are coming in the future, will the ITC be available to nonprofits? How will they be able to utilize the ITC going forward?
Mackie, you want to take that?
Yeah, I'm sorry. I missed will you say the beginning part again, Rudy?
Yeah, so the question is that, since they can't take depreciation, how can nonprofits potentially utilize the ITC?
Right, so the depreciation benefit is separate from the ITC. So the IRA unlocked the ability through direct pay for nonprofits to take advantage of the ITC. Depreciation, on the other hand, there's still no avenue, at least one that we've been able to find yet, to realize the benefits of depreciation, since that's a deduction to taxes, which, as we know, nonprofits don't pay. So that deduction is not realized when a nonprofit purchases a solar system, but they're able to access the ITC now.
Great, thanks, Mackie. So Ed had to drop off. We have a battery question I'm going to put out there in case Brian or Mackie want to weigh in on it, but just a question about the size. Is the size of a battery limited by the on-site load regarding the Energy Storage Solutions program?
Great question. Let me respond from two perspectives. From the residential perspective, there is a cap on the incentive level that can be used. I think in that case, homes can oversize their system, but there will be a cap on the upfront incentive, and there obviously will be an ongoing performance-based incentive through the utility active dispatch of the system. There may be additional heat pumps or EVs added to homes, so I think we would want to allow for incremental above current capacity, the ability for batteries to be sized. On the non-residential side, there is a conversation going on now within the Public Utilities Regulatory Authority docket that is looking at year 2 of the Energy Storage Solutions program, where the Green Bank, we've actually put out a position of the cap being 1.5 times the existing capacity of the facility. We've had a number of projects in the first round come in at multiples higher than their existing peak capacity limit, which shrinks the opportunity for others to participate in the program, given that we have capacity limits on the incentive program. And we want to make sure that we're fostering the sustained orderly development of the local battery storage industry. So we want to see more projects being done around Connecticut. So stay tuned for that. There was a hearing, technical meeting this week, and I would suspect that PURA will offer its guidance and direction in the coming weeks or months in terms of how the battery storage incentive program could be used to the size of the current peak of the facility.
Great, thank you, Brian. There is a question on Smarty loans, and I'm not sure that we can necessarily offer a complete answer, but I do know that the Smarty loan is something that we're always looking to evolve and adapt. The question is, will we see changes, including Tier 2 ratings, and when that possibly will be available? I'm putting that out there, Brian, in case you have any insight into that, but I'll say that we're always looking to improve the Smarty loan program, and if contractors or others have thoughts on improving it, certainly send us emails and reach out to us, because we're always evaluating that.
So I guess I would just add, Rudy, not to the specific point of the question around the SEER and the detail around that. We'll have to do a follow-up. But yeah, the Smarty is going to continue to evolve. I had noted that Governor Lamont in the Connecticut General Assembly supported the expansion of the Green Bank scope, include environmental infrastructure as a part of Public Act 21-115. So we are currently looking at the Smarty loan and how we can expand it for resilience measures, everything for, in terms of flood protection, weather protection, I've taken a look at a recent list of measures, and there's a good 30 plus measures there along the resilience. Well, we all get resilience from the power perspective and maintaining power and batteries, but there are also a lot of other measures that help prepare homes to deal with and recover from the impacts of climate, the heavy rains, heat, cold spats, you name it. So we're taking a look now at expanding the list of measures that can apply to the Smart U loan. So if you're a contractor out there who's doing things beyond energy that are, home improvements, environmental improvements, the Smart U loan will eventually be able to support you there as well.
Thanks, Brian. Yeah, lots of interesting potential opportunities for Smarty expansion in that space. So a question for Mackie on new construction. Has there been any difficulty in new construction projects for positioning on the title, since many banks and lenders, want that first position? Is there any, any way around that? Is there any conflict there?
Yeah, it's a good question, and just additional background. So CPACE, as I mentioned, it's a tax assessment on the property. By law, it's required to be senior to any mortgage on the property, and the mortgage holder must consent. As you can imagine, a mortgage lender having another lender come in senior to them is at first glance a tough proposition. However, over the 10 years of existence of the CPACE program in Connecticut, we and CPACE, other CPACE lenders have done a great job of educating local, state, regional, and national lenders about CPACE and gotten them comfortable with the product, primarily because, well, several reasons, but I guess primarily because it's not actually the full assessment that's due foreclosure, but just whatever is in arrears. So yeah, they're truly not behind the full assessment. It's just whatever's in arrears. So as long as everyone is underwriting appropriately, there's plenty of value in the property for them to recoup their debt or their mortgage. Also, there's the value that it adds to the property, the reduced operating costs. So there's lots of other benefits that has led to, on the retrofit side, pretty universal acceptance of the project, of the program. New construction is, at least in Connecticut, relatively new, just a few years. There's been a handful of projects that have happened in the state. So lenders have gotten comfortable and have consented, but we still are, we don't have that 10 years of experience on the retrofit side to draw on. So we're still in the process of educating lenders. So it's not certainly as easy as it is on the retrofit side, but it has been done for, the handful of new construction projects that have already happened in the state.
Thanks, Becky. Yeah, that's perfect, right? I mean, it's just showing the value, and they will hopefully get in line. Like, there've been over 300 retrofit projects over the past decade. So, all right, I don't see any other questions coming in at the moment. As I said in the beginning, this is recorded, and we will put the PowerPoint deck out as well as the recording, so you can all access that and share that. And if any follow-up questions or thoughts come along, please feel free to reach out to us at the email address you see on the screen. We'll make sure to pass your questions along to the appropriate people. So with that, I think we'll wrap up a little bit early. Appreciate everyone's time, and thank you for attending today.